Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 122, New Year's Eve 2023. And so in this episode, let's take a look back. Let's think about how did the year go? What were some of the main financial stories of the year? And what are some things we're hopeful for 2024? Some of the things we're looking ahead to, some of the considerations for the year financially, of course, and just kind of take stock of where we're at right now. So get your mind right. Let's have some fun. Well, happiest of New Year's Eve to all of you out there. I know I threw it, made it a little bit different this time, didn't I? I usually say, get your mind right. Let's get to work today. Get your mind right. Let's have some fun. You know, if we're going to work this hard, we got to take some time to enjoy it. To all of you watching on YouTube, I got my bubbles here, got some champagne, doing New Year's right here. So after a good year in the market, you know, we have to take some time to reflect back, to think about what we're thankful for, what we appreciate, and really just kind of reflect on the year. You know, last year we did our think about the next 10 years out, think about your goals for the next 10 years. I have, gosh, man, I was doing that this week and it was a little harder than I thought it would be. I think when I set my goals 10 years ago, it was a little bit easier. I got very aware of how different my life is going to be in the next 10 years. And so that made it a little bit difficult for me. Not that I wasn't aware, but I mean, my daughters will be, getting close to being out of college. And so my life, my life is just going to look so much different. And so it was a very real realization of the time that I have left with them under my roof, the lessons that I would like to teach them, the trips I would like to take with them, and just kind of the setup that I would like to give them as they go off into life. And so just those things. And I guess that's one of the reasons that exercise is so important, is to really make you hyper aware of, that nothing's guaranteed, time isn't guaranteed. And so you have to think about those things and the people that you want to help out and all of those things. So my goals for the 10 years that I talked about last time, when I set those when I was 29, 30 are very different than the ones I'm going to set now at 42. Back then I was, I'm not saying I was selfish, but I was trying to come up, right? I mean, I was trying to build my career, build my practice. And, I was really just kind of out for, personal goals. And now as I set goals for the next 10 years, I'm thinking much more about, how do I help more people? How do I help more families? How do I help more people start their businesses and kind of be a mentor? And so it's an interesting contrast, and I am thankful that I do track all this stuff so I can kind of see it as I go through my life. So that's kind of it on that. I really, when you record these episodes, it's just like everything else. It's like a presentation, and then 5 minutes after you're done, you start thinking about all the things you wish you would have said. So as we hit here, we hit New Year's Eve. We think about 2023. We think about the year behind us. The markets had a great year. The S&P 500 up 24%, NASDAQ up 43%, Dow Jones is up 13.7%, Russell 2000 up 15%. Just a tremendous year across the board. And one of the things I want to emphasize here is how many experts did not think the year was going to be good, how many hedge funds underperformed the market. And really going back to many of the things we discuss is, man, you got to stay the course. You got to be on the dance floor. Whether people think it's going to be good, whether they think it's going to be bad, it's probably going to be somewhere in the middle. And so you just never know. You never know. You gotta keep believing. And it's kind of annoying. It's not annoying, but everything. The thing about the financial industry that you have to think about is there's so many things that can be taken out of context when it comes to the financial world, which is we discuss, everything you hear about the market is how good the Magnificent Seven did. And a reminder to you, the Magnificent Seven are NVIDIA, Meta, Tesla, Amazon, Google, Microsoft, and Apple. And they had a tremendous year. The Magnificent Seven had a tremendous year. And you see that in the headlines, but what they don't discuss is how horrible their 2022 was. And so instead of just looking at, how did these stocks do in 2023, I think about how did they do over the last 2 years, really, because that's really a better gauge because 2022 was so painful. And so, looking at that, it just kind of helps the context a little bit. I always think about John Wooden and, never be too high, never be too low, right? Your peaks, don't have your peaks be too high and your valleys too low, I think is more specifically what he said. But I think about that. I think about how good this year was, how bad last year's was. Try to stay even keel. Don't be too excited. This too shall pass, so to speak. And so I want to just talk about some of the themes that we're probably going to see in 2024. I started thinking about these. I'm currently in the middle of writing my client newsletter that I send out every year. And I think about what some of the major themes are for the year. And so, to outperform the market, you got to be a little bit different from what everybody thinks, right? So if you thought this year, if you kind of, put your, invested this year, kept investing in good stocks, you probably outperformed the market or at least captured all the market gains. And so you were kind of contrary to a lot of the things that everybody thought was going to happen this year as far as a recession and things that did not occur. And so looking out to next year, I'm reading a lot of the economists and financial people, and everybody's thinking about, the Fed's going to cut interest rates next year. And so I'm always thinking about, okay, well, what's the news story that maybe isn't going to be seen out there? And what could be different? Well, for this one, if the market is thinking that the Fed's going to cut interest rates, well, obviously one of the things that could happen is they don't cut interest rates. So if they don't cut interest rates, how is that going to impact, certain businesses that we invest in, companies that we look at? How is that going to change the scope of what the expectations are? Because the stock market, a lot of it is just based on expectations. How do you expect a company to perform? How does a company see the economy? What are their expectations for their quarters? How are they projecting what they think their earnings per share is going to be? All of these things revolve around expectations. And so if there's an expectation that the Federal Reserve is going to cut interest rates by 6 times next year, then what happens if they don't? Because we have to start looking at the economic data. How does the numbers look? If it looks like they're going to cut, if they cut one time and all of a sudden everybody goes out and buys a house and they do all these things and economic activity rises real quickly, they probably won't cut interest rates. So that, again, is going to be a story that continues into 2024. And again, will be kind of annoying with all the data and waiting for the numbers. And we start quick. This week we have the jobs number is going to come out on Friday. Manufacturing number comes out on Thursday. So, there's no rest here. We start January with a running start. As far as the stock market is concerned. But when you look at some of the talk or some of the analysis, and you'll hear, analysis say, well, man, the market had a good year, but it was only in the Magnificent Seven. It was only in these concentrated stocks. Well, just so when you look at that, your leaders, when you have a market that had such a terrible year in 2022, and you have this big downdraft with everything getting sold off and all these companies, really getting pounded. Well, anytime you see a recovery, you always have a recovery in the strongest stocks first, right? The leaders of their industry are usually the ones that are going to come back, and they're going to come back bigger and faster than everybody else. And then once that happens, then the market can actually expand, and you can have a rally, kind of a broader rally against all these other companies. And so the fact that, a lot of the performance was baked into those, those kind of big time tech companies, those strong companies, it's not a negative thing for the market. It actually means that because they had big gains and people didn't sell out of them, right? They didn't sell into those gains. They're holding on to those companies. Now the market can kind of broaden out and you can have the other companies come up. And so if the Federal Reserve does start lowering rates, if the Fed starts lowering rates, I mean, you're going to want to look at small cap companies, mid cap companies, companies that traditionally really struggle when interest rates are higher. Those smaller companies that aren't as financially strong, those would be the ones that probably come back a little bit better this year. So drawing your attention to a couple ETFs that hold those, the iShares ETF for small cap stocks would be IJR. And then the iShares mid cap fund would be IJH. And then you can also buy IWM, which is the Russell 2000 index, which is the 2,000 smallest cap companies, cap being capitalization, being the entire value of the company. So if the Fed does start lowering rates, that means that companies' profits in the future are actually worth more today, which is going to have a greater impact on smaller companies. And so you're going to want to have some of those in your portfolio. But that's only, the expectation already is that the Fed is going to lower rates. And because of that, there are investors that have front run that trade. And in December alone, I believe the Russell 2000 was up 15%. But if you go back and you look at a chart, I mean, the Russell 2000 is still not above, or it's very close probably now to where it was in 2021. And so, the NASDAQ is still not at its high from 2021. So there is some room to grow here. But normally the first quarter of the year, when companies start reporting, we do normally have some kind of sell-off. A 10% sell-off is not a unnormal thing. It's a very healthy thing for the market. So maybe look for that. If you're looking to invest more money, look for a little bit of a pullback and just kind of get your list ready of companies that you want to invest in. And again, when it comes to looking at companies you want to invest in, man, you got to look at earnings per share. You want companies that can grow earnings. So looking at the economic environment that's ahead of us, who are the companies that are going to be able to continue to grow their earnings? Those are the companies that you want to look at. Those earnings, when at the end of the day, everything's said and done, a company that can grow their earnings, eventually the stock price will wake up and people will start to notice that. So that is definitely something you want to start looking for. I think another big theme for 2024 is going to be a new SEC a new SEC, standard law, whatever you want to call it. I can't think of the word, where companies are now going to have to file on their 8K reports anytime they have a cybersecurity breach, an incident. And because of that, there are probably going to be, I'm thinking there's going to be companies that are going to have to upgrade their cybersecurity platforms and really take this seriously now that they're going to have to let everybody know if they have any kind of incidents. And so that cybersecurity trade, that's going to be companies like Palo Alto Networks. That's going to be companies, who else is in that category? I just absolutely drew a blank. So Palo Alto Networks, very strong company. It's had a very good run. I think it can actually, I would definitely be one that I would be looking at again, or just looking at would be looking at Palo Alto, and just going and looking at some of the other cybersecurity stocks, and really thinking about, CrowdStrike would be another one. CrowdStrike is another great cybersecurity company, and I always think about, when I'm looking at these companies, one of the big risks for CrowdStrike or Palo Alto, obviously, if you're a cybersecurity company and somebody breaks through your system, that's going to be a big risk for your stock. But cybersecurity is not something that is going to go away. CrowdStrike is currently has a market cap of 60 billion. Palo Alto is at 100 billion. When you think about I know that sounds like a lot, but when you compare that to, Apple, Microsoft, and you look at the companies that they're protecting, I think that this industry is going to be very, very important for many years to come. So that is definitely an area that I'm going to be focusing on, looking at some of these companies and looking to add to them. The other thing about 2024 is obviously I don't think it's going to start maybe now. Is it going to start now or maybe on January 1st, 2nd? But election coverage for the 2024 presidential election is going to start, and basically probably midsummer. That's all we're going to hear about until the election. And so I'm sure be doing episodes. We'll be discussing this. It'll be something that we talk about, ad nauseum during the year. But really, you look at who's president. Does it impact the markets? Of course it does. How does it impact it? Well, maybe not as much as we want to believe. You always have to remember, if you're disappointed with who gets elected, there's 50% or close to 50% of the population that's going to be excited about who is elected. And so you can base, you always usually get an influx of funds into the market. And I think that'll be a big piece as well. And then one other theme, sneaky theme here, I think, is that there's still a lot of money on the sidelines, as far as that's in money market accounts, that's in savings accounts. If the Fed starts to lower rates, CDs right now are paying about 5%. I mean, they're actually coming under 5% now. And so if rates don't stay there, everybody that put their money into CDs, because they thought the market was going to do bad or wasn't going to do as well as they thought, they wanted some safe money. If those rates start to come down, then all of a sudden value stocks that pay dividends, that have underperformed for the past year, think of companies like Procter & Gamble, Johnson & Johnson, those kind of companies. If those CD rates continue to drift down, and bonds aren't issued, at a very high rate either, then all of a sudden those value companies that haven't been as prominent as the CD market, money market funds, those kind of things, all of a sudden those come back into favor. So you look at companies that didn't do well this year. You look at like a Hershey's, did not have a good year. Those types of companies can all of a sudden start to do and look and probably be much better. When you look at, my goodness, Hershey's back in May hit a high of 275. It closed the year at 186. So Hershey's was a little bit of that. And then it's also because of the weight loss drug that Eli Lilly and all those companies are coming out with, which will be another theme for 2024. What the weight loss drugs, you look at Eli Lilly is now the most valuable pharmaceutical company. And so those kind of things, these kind of themes, obviously AI is going to be a theme that we carry forward into 2024. Can companies figure out a way to monetize it? Who will be the companies that monetize it the quickest? What kind of impact is that going to have on their revenue? All of these things are things that you need to be considering, thinking about when you're building your portfolio, looking at maybe how am I going to redistribute the money that I've made when it comes to redoing your portfolios. Think about those themes. Think about the companies that you've had huge gains on. Should you sell a little bit of that and reposition to maybe some of your companies that underperformed, that are good companies, that are still growing their earnings, growing their revenue, keeping their expenses in check. Those are the kind of companies that you want to look for. And then also, I think at the end of the year, it is always valuable before you set your goals. And I don't think I don't spend enough time on this, but before you set your goals, when you're thinking about this, think about all the things that you're grateful for. Think about, the things that you're grateful for. What are some great things that happened to you over this year? What are some things that, maybe you didn't see coming, things that happened that were a good thing? We're twice as likely to be impacted by a negative as we are a positive. So I think a lot of times when people are thinking about their year, you hear them go, oh man, this is a bad year. Like, I'm just so ready for a new year. And there are bad things that happen. Obviously, there's bad things that happen to you over a year, but there's also good things that happen. We have to remind ourselves of the good things that happen. Remember that, when you do that 10-year exercise, the things that you're dealing with now might be the things you wished for 10 years ago, 5 years ago. So starting the year with gratitude is incredibly important, to start with the right mindset from a place of gratitude and thankfulness. I'm thankful for all of you, the listeners, the watchers. We've slowly grown this thing. We've grinded, top 5% in the world now, and it's just steady, consistent, and all of those things that we always talk about, how important that is. And so I'm grateful for you. I'm grateful for the number of people that have shared the podcast, which is incredible. My students, my clients, everybody, my friends. It all makes a difference. So I'm very grateful to you. And, this next year, we're going to be doing more interviews. Hopefully, we'll be coming up with some good content, always looking for different ways to improve this. And so from my team to you, we appreciate you. We're excited that you joined us in 2023, and we're looking forward to producing good things for you in 2024 and hearing your stories and how investing has impacted your life. And so from all of us, have a safe and happy new year, and we will see you in 2024. Thanks, everybody.